Disclaimer: this video is created for educational and informational purposes only. It should not be taken as financial, investment, or legal advice. Always do your own research or consult a qualified financial professional before making decisions related to money, investments, or financial planning. Have you ever noticed that the people who can least afford it often end up paying the most? It seems unfair, but it's not just bad luck. It's the way the financial system, markets, and even daily convenience operate. A structure that makes survival more expensive for those living paycheck to paycheck. Let's start with loans. Imagine you need $1,000 for an emergency. If you have a stable income and good credit, banks offer low-interest personal loans or lines of credit. But if you don't, you're limited to payday loans, rent-to-own agreements, or subprime lenders. These options can carry interest rates of 300% or more, turning a small emergency into a long-term burden. That's the first way poor people pay more: borrowing costs. Now think about everyday shopping. Buying in bulk is cheaper. One large pack of toilet paper is far less expensive per roll than a single pack. But bulk requires money upfront, storage space, and transportation. If you live paycheck to paycheck, you can't afford to stockpile, so you buy small amounts frequently, and every single purchase costs more. Even on items like milk, bread, and eggs, you're effectively paying a scarcity premium because you can't buy in bulk. Transportation is another invisible cost. Someone with a car can amortize the monthly cost across thousands of miles and use it whenever needed. A person without a car must rely on taxis, ride shares, or public transit. Over the month, those daily costs often exceed the cost of owning a reliable vehicle. Add in delayed trips, missed opportunities, or long detours, and time literally becomes money lost. Even phones and internet plans follow the same pattern. Prepaid plans often cost more per unit than contracts because companies assume prepaid users are higher risk and less predictable. If you can't prove steady income or creditworthiness, you're forced to pay more for basic communication. And then there are financial products designed specifically to profit from the less privileged. Payday loans, subprime mortgages, and rent-to-own stores are examples. A $200 emergency loan can quickly become $300 or $400, with fees and interest. These products exist because people need them, but the system profits from that dependency. Insurance is another major hidden cost. Low-income individuals often pay higher premiums for health, car, and home insurance because they are deemed higher risk. The combination of smaller deposits and fewer choices forces them to pay more, yet even then, coverage is often insufficient. A small accident or illness can turn into a financial catastrophe. Even the places you shop matter. If you live in a food desert, you might be forced to buy groceries at convenience stores or small shops where prices are higher. Compare the cost of milk at a local corner store versus a supermarket chain. Sometimes 30 to 50% more. That difference isn't optional, it's structural. Now let's talk about psychology. Living with scarcity shapes behavior. If money is tight, you make choices that solve immediate problems, even if they're costly in the long term. Paying extra for ready-made meals, skipping bulk purchases, or taking high-interest loans might feel necessary in the moment, but they amplify long-term expenses. Behavioral economists call this the poverty trap, where short-term survival decisions create long-term financial stress. Even banking practices contribute to the cost. Poorer individuals are more likely to use check cashing services, prepaid cards, or high-fee bank accounts. Each transaction carries a small fee, $2 here, $5 there, which seems minor but adds up significantly over months and years. Meanwhile, wealthier individuals use accounts with zero fees, direct deposits, and investments that grow over time. Credit and financial literacy also play a role. Without access to education, mentorship, or advice, it's harder to spot fees, negotiate better terms, or plan ahead. The system assumes you'll pay for convenience or inexperience, and most do. Even healthcare works this way. If you're uninsured or underinsured, a simple medical visit can be drastically more expensive than for someone with a premium plan. Hospitals, pharmacies, and clinics often charge higher prices to those without insurance networks, adding another hidden premium to living on a low income. The poverty premium exists across the board. Loans, banking, groceries, transportation, insurance, housing, communication, and even entertainment. Every decision, every purchase, every service is subtly more expensive for people with less financial flexibility. But knowledge changes the game. Recognizing these patterns is the first step. Understanding where extra costs come from allows you to make informed choices, like joining co-ops, using bulk buying clubs, researching prepaid versus contract services, or avoiding high-interest short-term loans. Even small savings compound over time. Planning ahead is crucial. Building a small buffer, tracking every expense, and exploring alternative options can reduce the cost of living disproportionately high for those with fewer resources. And over time, these choices accumulate into real financial freedom. Finally, long-term strategy matters. Education, skill development, and asset building increase flexibility. The more choices you have, the less the system can exploit scarcity. Being poor isn't only a lack of money, it's a lack of leverage. And the fewer restrictions on your financial behavior, the lower the hidden costs become. The system isn't designed to be fair, it's designed to function. And those with less capital pay a higher price to keep it running. But awareness, strategy, and smart choices give you control over your financial future, and that's the ultimate power. Tell us in the comments. Have you ever realized you were paying more just because of your financial situation? Don't forget to like, subscribe, and turn on notifications. We post new videos every day to help you make money finally make sense.